What's up everybody, welcome back to the Art of Crypto. In this video we are going to talk about what is going to happen with Bitcoin this week. I'm going to lay out my thoughts on what you should expect on Bitcoin, and if you're interested to find out, make sure you stick around to the end of this video. Now if you remember, last week I mentioned that this was sort of a level 1 formation, that's a 2 and that's a 3, and we'll be coming down from here back to 38,000, and this is exactly where we have come back to. So yesterday as well on my Twitter I mentioned that, let's see, if you were going to form a higher low on the daily chart, right, this is going to be the place to do it. So currently you can see that this has indeed been the case. Now this is what I mean by the daily chart. This candle right here, this is a bullish order block, or rather if you take a look at this, right, basically since the pump straight up from here, there has been a clear lack of price action here, right? Makes sense? That is what you call an imbalance. The VPVR shows this as well. Imbalances tend to get filled sooner or later. So this is indeed what we have seen, because here's the thing. The markets are moved by the market makers, and they are not in the business of helping you make money. They are in the business of making themselves money, right? Makes sense? But here's how this relates to what I just said. When they push the markets upwards, right, when they reprice the markets upwards, they are taking on a loss on their short positions, because market makers go long and short at the same time. They are not like retail traders. They're not like me and you, where we think we just go long or we go short. They go long and short at the same time. So what happens when they push it up like this is they need to come back down to recover or mitigate their positions, yeah? So that's why they have to fill in the imbalances, right? You see this across every single market. You see this across crypto, forex, stocks or whatever, right? Always happens, always will. So the sooner you learn to come to terms with this, the better, because then you're probably not going to get wrecked on trading. So with that said, what's going to happen next is, firstly, this level right here, right, or rather not level, this block right here is going to act as immediate resistance. So let me just narrow down this block. So the block from 39,600 to between 40,100 is going to be like strong resistance for Bitcoin, right? And I wouldn't say strong, but this is the first level of resistance that you're going to run into on Bitcoin the moment you come here. So for those of you who were following along with the trade call that I shared in Discord yesterday, then you would be in good profits right now. But if you went long at any point over here, then you're going to want to take some profit, right? Just some at here. Right, and maybe you can start hedging a short. Basically what that means is, if let's say you took on 1% risk on the long here, right, so you come up here, then you will open on a separate account preferably, or even in this account, that works as well, right? Open up a short, right, with 0.5% risk with a stop loss above here. So what this allows you to do is, if the market does go down, you can take advantage of it, right? That's called hedging. And if the market continues to go up as well, you are already net long, because your position is, it's worth 0.5% more on longs than it is on shorts. That's what I mean by hedging. It is something that the market makers love to do, and I might even suggest you do it as well, right? Smart traders do this, and it's just a way to mitigate risk. So first resistance, 39,600 to 40,100. But if you do break above this point right here, especially the first sign that I would look for me to say, oh yeah, we're definitely bullish, is a break above 40,400. It's because over here you have a previous high. In fact, you have multiple highs here. But even though this might be a bullish sign, if you do break above here, I'm going to take a short. Let me explain. Every time you see equal highs or lows, or even just a poorly formed low, always expect it to get purged, right? Because this is where liquidity is at. Because retail traders are going to be looking at this level and they're going to be thinking, wow, that is strong resistance, so I should put my stop loss here, right? And if that happens, if that's you, those stops are going to get run. There is nothing wrong with using a stop loss, but you have to understand what is the direction that the market makers are pushing things to. You need to understand order flow. So there is liquidity up here. So if you do come up above here, right, you're very likely going to wick just a tiny bit above this, or a tiny bit above this part right here. Right, you see how there are multiple poor highs formed over there. Let me just go onto the 1 hourly chart and you can see what I mean, right? That's just prime liquidity to be taken right there, here as well. So if you do go up above here, right, I'm going to lean towards shorting with a stop loss maybe here or above here, and then you're just going to take profit after a 1, 2 or 3% dump, right? This is a liquidity purge and revert, and it is one of the most textbook trade setups that I like to take. So, but that's only step one, because after you break above the high, right, you already have signs of changing order flow into bullish order flow. Here's what I mean by that. Throughout this entire process, you know how we've been forming high highs and high lows? This is what you call bullish order flow. Throughout this process, we have been forming lower highs and lower lows. This is what I would call bearish order flow. So the signs of reversal, when the signs of reversal into bullish order flow, is first you need a break above previous highs. In this case, it's going to be 40,400. Once you get the break above previous highs, you'll want to look for an order block. In this case, this would be right here. Although it is not very clean, I'm still going to try to use it anyways. Yeah, it's definitely not very clean. So you're going to first break a previous high, come back down to form a higher low, and bam, right? And that's exactly what we're seeing on the daily chart right now, which is bam, right? I know you already broke the swing low here, but you're coming back down to fill in a balance, right? So there's context here. So assuming that is the case, this is the place you form a high low and order flow switches bullish, and we go and hit and target 52k or even 48k. This is how it works. That is currently what my idea is. And if you haven't already followed me on Twitter, you're going to want to do so. Like, I'm just sharing market updates there that I wouldn't have time to make a video on otherwise. So make sure you follow me on the Twitter. And following that theory, then I'm going to look for some kind of an order block to form, give or like at or around 38,600 or 700, maybe even 39,000. I wouldn't really count on that though, because I like order blocks to have, you know, more bodies to it, right? Not just a wick. So in this instance, I wouldn't. This is very ugly. So to be honest, I'm going to update you guys on Twitter. I can't say exactly where an order block is going to form. Ideally, you can turn on your session volume and hopefully look for a POC to form below here. So talking about session volumes, I'm going to talk about a potential resistance for Bitcoin as well, because the way I was able to, well, for one, determine that this was going to be like a strong level of support is through the POC. Now, POCs are very useful to see where the majority of the trading volume happened. It also means that, for example, over here, if you assume that the largest amount of traders open their positions here, then the largest amount of traders are going to want to defend their position once price returns back to this area. Makes sense? Because nobody likes to be in a loss. So once price returns back to this area, maybe you might add longs, right? There might be a quote-unquote buy wall, you know? So inversely, right, when you get a POC up above, then that's going to be a sign that traders are going to look to take profit over there. So this also means that in between this entire level, you can see how there is a clear lack of just volume. So it is very easy for Bitcoin to pump all the way back to this point right here at 42k, because there is just a lack of resistance. Now, if you guys haven't learned how to, you know, trade with session volumes and POCs, you're definitely going to want to try to learn how to do so, right? This has been incredibly eye-opening. It is a tool that I cannot do without. And while I do not yet teach it in my private Discord group, if you want to gain access to all of the market updates and follow along with all the trades that I'm calling, for example, I called BNB yesterday, I called PYR, I called ILV, stuff like that. If you just want to find out, is today a good day to be trading, or is today not a good day to be trading, check out the private Discord group, right? Over here, you're going to get access to the trading course, which I'm working on remaking right now. And, you know, you're following along with all the trades. We have a cool community here. And, you know, we're making money every single day. It's probably going to pay itself off real quick. Currently, monthly subscriptions are open right now on the Patreon. I think there's only about 40 spots left. Once it fills up, you know, you're going to have to wait for somebody else to, you know, cancel their membership. But currently, monthly subscriptions are open if you just want to try it out for a week or whatever, right? Head over to the link in the description below. If you're not interested, well, let me just get back to the video then. So this is going to be the first level of trade resistance, right? Seeing how there is no POCs above here and there is just a clear lack of volume. Now, assuming that 38k is the max pain for now, then we are indeed going to go back to 42k. However, remember what I said, nothing changes until you break 40k 200, 40k 400-ish. And more importantly, remember that this is strong resistance, right? More likely than not, if you follow the theory of order flow, seeing how we are still bearish at the moment, we are going to get rejected here and we're going to go down below to test another POC. And in the event that you do, this level right here, this POC right here at 37,000 basically, is going to be very strong support for Bitcoin in the event that it returns back there. Not only is that a session POC, but if you take a look at here, this is a bullish order block, and I use order blocks a lot in my trading for those of you who have been following along this whole time. And if you have been, I want you to comment down in the comment section below, order block. It's a really small gesture, but it helps the YouTube algorithm out a lot. And while you're at it, drop a like on this video. Again, small gesture, but I would really appreciate it a lot. So bullish order blocks is something that I use a lot in my trading, and these will give you a very clear area of value for you to take positions. So for example, throughout this entire imbalance, like when you have this imbalance right here, notice how the first point of price action is always, or most often, at a bullish order block or a bearish order block. In this case, this is a bearish order block as well. So it gives you a very clear area of value to either go long or short, because if you're short, you can place something like this and you can take profit at the next order block, for example. And if you're going long, you can catch the exact bottom by using order blocks, something like this, right? Just as an example. So notice how good the risk to reward is, right? That's a R to R to 4, that's a 8 R to R, just as an example, right? And in this case, if you do come back to 37k, that's going to be very strong support, right? Not only do you have order block, but the session volume confirms that there is a strong POC over there. So with that said, I haven't actually shared what I think is going to happen. So what I think is going to happen this week is, assuming that this is level 1, that's level 2, 3, that's like level 2 down, and this is level 3 down. Assuming that is the case, right? Because markets always move in this fashion, right? Level 1, level 2, level 3, you come back down, level 2, level 3, right? Markets always move in this fashion, and then, it just, it repeats the process. Assuming that is the case, right? Assuming that is the case, then you're going to just start pumping from here, right? More likely than not, you are going to come back up to here, consolidate, and then you're going to go to 48k, consolidate, go to 52k, consolidate, and then you come back down, right? Something like that. Although in this week, I'll probably only expect level 1 or at most level 2 to happen. I'm not expecting this whole formation to take place over the entire week. For now, this is all just speculation, so I will continue to update you guys as the week goes. Hopefully, I've prepared you guys enough for what to expect, at least in the immediate levels. Hopefully, this is a very clear analysis. If it is, comment down in the comment section below. It's really good to get some feedback on how these videos are going. And most importantly, follow me on my Twitter, because I'm going, if I'm going to update anything, it's going to be on the Twitter. Now, before I end this video, let's take a look at the MRC, just to find out exactly where we are. Now, if you remember last week, I made a video that we were going to get rejected at the mean reversion channel. Look at how beautiful this played out. Wow. Guys, you cannot make this stuff up. So, yeah, if you follow this theory, you are primed for a pump, which follows the level 1, 2, 3 formation. Yeah. And yeah, make sure you subscribe for the best crypto analysis. If you found this video helpful, share it to your friend. And for now, may the gains be with you, my friend, and peace.